Hello there guys, welcome back to today's video. We're going to be talking about prop firm challenges today. Now, uh, what we're going to be looking at today, we're going to be looking at how to pass the challenge. So pretty much we want to pass the challenge, of course. Okay, and the prop firm challenge, the prop firm that we're going to be looking at is going to be funded next. Now, why funded next? It's because funded next allows crypto. Okay, so we want to be able to trade crypto, especially in this particular case. Okay, now what we want to do, we are going to have a checklist that's going to help us pass this. And here is my checklist. The checklist, we're going to be looking at the order flow. We're going to be looking at order block. We're going to be looking at any wick that's been mitigated, of course. Okay, and wick mitigated. We're going to be looking at any fair value gap as well, so average. Now all these must be unmitigated for it to work. Okay. Now, the checklist will also have the risk, the risk. Okay. Now the risk, what we're going to be doing, we are going to be aggressive. Now, how aggressive are we going to be? We are going to be 4% aggressive. Okay. Now, for the next, the prop firm has two challenges or two phases, I'd say. The first phase, to pass it, we need 8%. And then the second stage, we need to pass it, we need 5%. So to pass it, this is what we need. Now the first aim is to get 8%, of course, and then the second one, we pass the first one, we're going to be given a new account to do a 5%. And then once we get that, we're going to pass the challenge, going to give us a funded account. Alright, now the drawdown on this one, so the daily lost, the daily lost, I'll say daily lost. Okay, now this is 5%, and then the max loss we can have on the entire account, is 10%. Okay, right. Now you're going to ask me how the hell are we going to pass if we're risking 4%, okay, on the account. Now, so this, now why are we being aggressive? Okay, we're going to be aggressive because if we're risking 4% and we're looking for, around the risk to reward of a minimum of 1:2, 1:2. Sorry about that, 1:2. Okay, so this means that if we want two trades, we're going to be making. Sorry, if we're risking 4%, so we're risking 4%, and we're making twice that, so we're going to be passing the challenge straight away. Okay. Now this is just for this one, yeah. This is just for this one. Unfortunately, if we do lose, let's say, if we do lose the trade one day, so that's 4%. We need to just walk away that day and come back the next day. Okay. If we lose another trade the next day, so if we lose 4% one day, we come the next day. If we lose 4% the next day, then that's 8%. That is close to the daily, to the maximum lost, and then we need to be careful. So what we're going to do is we're going to be aggressive. Yes, we're going to be aggressive. Okay, and yeah, and the account size that we're going to be looking at, the account size, which I didn't put it. So the account size we're going to be looking at, a $15,000, 15,000, sorry, a 15,000 account. Now, why this here is because the price of it. Okay, now the price is affordable, so the price for this account cost $131. Okay, throwing down dollars. Now, some people may want to go for a higher account, so I'm just going to put it on the screen here for you guys can see. All right, so this is the entire thing, so you can see that. So this is the 15k account, and again, loss size, and this is how much cost is 25k, which is roughly double that, and then 15k, 100k, and so on and so forth. You can see that if you want to pass, you want to be willing to do what you need to do. Okay, so let's close this down. Okay, so let me show you the trade first of all. Right, so here is the trade, okay, which we've done, and you can see that we passed the account. We've already passed the account. So what we've done is here is what we've done. I'll show you what I've done first, and then I'm going to show you the trade setup. So let me see if I can do that. Okay, let's do this. Okay, now the first trade we did this. So we won. Oops, that's not the correct one. Here we go. So the first trade, we won this much. Now, why do we want this much? So this is because I moved. I moved my stop loss to break even, to slightly above break even, and the market came down and then worked me out. Okay. Now so we won this one. So this was roughly, I think, 0.5% of the account. Now we lost the second trade, so this is the second trade lost. So this brought our account to negative 4%, and then we came back stronger. We won this account, so this brought us, I think, so this brought us 13. So let's do a quick math here. Where's my calculator? Okay, so let's use the calculator. Why is this not working? Okay, yeah, I know why this one. Here we go. Let's bring our calculator. So 13 this over 15,000. So this is 8%. Okay, so this is 8.5%. Now 8.5%. We should have been passed, but since we were down 4%. So this brought our account to plus 4%. So this brought our account to plus 4% here. Okay, so actually it was 8%, but because of this negative, we got down. And what happened is we got down again, negative 4%. So you know what I will do? I will do it this way. So okay, so we got 4% here. So take away 4%. Now the account being brought back up to 4%. And then what happened is we lost another trade. So we are down. Oops, we are down to 0%. We are down to 0%. We are down to 0%. And then what happened next is we passed the account. So you can see here we passed the account again. Okay, so this is where we passed the account in this particular case. So this was 8% itself, and we passed the account in this particular case. You can see how aggressive it was. Now, if we were to lose this trade, so we lost it. So we were pretty much, this would have reset our account pretty much back to negative 4 to where we were before. Okay, so just in quick summary, so we started, we won 0.5%, and then we lost negative 4%. We won plus 8%. Okay, but our account were actually up 4% because we already lost there. So we're up, and then we lost, and then 4%, and then finally we won 8% in this particular case. All right, which is amazing. So we passed the first phase. The first phase was passed. All right. Now the second one is, this is the second phase. You can see that we start off with a loss of, this was pretty much, I think, negative 4.5% maybe, 4.5%. Okay. Let's have a look at the maths again. Okay, so this was 4.3%. So 4.3%. 4.3%. Now again, just remember, where are we? We're close to our day. We were close to the daily max. So we need to be careful there. So that's why we're risking 4%, roughly. Okay, so 4.3%. So this was negative 4.3%, and then this was an amazing trade which we took. As you can see, this pretty much passed our account entirely. Right, so this is now let me show you how to apply these trades. Now we were trading Bitcoin, of course, so here we go. So we were trading Bitcoins, so this is where we were. Now on the weekly time frame, Bitcoin was at this order block, you can see, and we expected to see some sort of reaction, some sort of bearish momentum, which we got in this particular case. But let me go on the 4-hour time frame to show you the first few trades which we entered. Not this one, it was this one here. Let me just disable this one here. Here we go. Okay, now so market was trading like this. So here we go. So market was December goes up and down, so on and so forth. Again, here we go. So happy new year. And then the 1st of January market gapped up massively. You can see my market went all the way up from this side here. Okay, so let me just zoom in to the 1-hour time frame so we can actually see. And I don't think I have there's no replay action. It's going to use a replay action here anyway. Okay, so that should be enough. That should be enough. Okay, we have one more there as well. Let me just spread it out so we can clearly see. And here we go. Okay. All right. So what happened is market gapped up. Yeah. So this is the new year gapped up, and then we have a break of structure at this point. So BOS, you can see I've marked it down. Break of structure went up, and we were expecting to see a retracement some point to the discount level. So this is premium. So all this here is premium. So we need to come into discount to buy. Again, why are we buying? Is because we were clearly in the uptrend from the high time frame. Yes, we have a big PD area here, but we were not in the 50% of the PD area. So this is the big PD area. So from here all the way to here, so 50% is there. We were not in the 50% yet. So I'm looking for market to trade into the premium discount. So go up a little bit. Now, so we want to go down and buy. So what happened is market went all the way down here. So we wick this one, so you can clearly see. Let me just delete everything. Come back. So we came back down here. We wick this one here, and that's why I was looking for an entry. Okay. Now we have a big. So this candle went down, push up. We have a nice displacement on the upside, and then we have this order block down here, and then market went up. So it's looking at the lower time frame to enter. In this particular case, on the lower time frame, 15-minute time frame, I have an entry here, and my stop was I think below this here, and I was targeting this order block in this particular case. Now, why is this order block and not the highs? Is because this is where the supply was to cause the market to go down. Okay, that's what my target was. And if I do with this trade, which it does eventually, then this would have been my plus 8% phase one passed, but it didn't. Now let me show you why it didn't. Because as soon as market broke this high, so this is the high market broke. As soon as market broke this high, what I did is I moved my stop loss a little bit above breaking even point. Okay, and what happened is market broke this high, so we have a big small BOS here, and market retraced back down, and this time it went all the way down to take out my stop, which was at this point. And this was the I think I think $84 it was. And unfortunately this means that okay, I need to enter again. So market came down, we have a big wick here. I'm looking to enter again on the lower time frame, and I saw that here. I saw that market was trying to displace on the upside, and I entered here, and this time I'm trying to go for the same target. Unfortunately market came here to this small supply zone and then went further down to take out liquidity below to continue going higher, and unfortunately this put me down minus 4%. Okay, now my bias was still bullish, so it's still looking to buy, and immediately after that we have a engulfing candle. So okay, we are getting ready to push up, and then trying to go an entry around here, and then I entered here in this case. And now this time I was like, okay, so market is clearly going up, so I'm going to go and target this high here. Okay, because what has happened is we've taken this order flow, so these from here, so this buy, you can see this buy here, so this point here, so this buy to sell actually been tapped into this. Okay, so orders from here went into here. Okay, so I'm ready to buy in this case. So I'm going to buy here, and my stop loss would be below this low. Now, why below this low is because this is the candle I want to take out all this liquidity below that. So I'm pretty sure it's going to be safe. You can see the market went down to take out liquidity below that, and I was still safe. And then market eventually went up to break my target, and I won this trade. So this was 8%. Good. Okay, so therefore I needed one more trade to pass this here, and so market from here to here, looking for the discounted zone. The discounted zone was somewhere around here. Now what has happened is we have an order flow around this point. Okay, and then we have another one here. So the last selling to go up in this case was here. Now market came down with this one, so I was looking for an entry, and unfortunately couldn't see any entry. I was looking for an entry here because from this week we had a nice reaction, couldn't see anything, so couldn't enter. Market continued going downwards here, tap into this fair value gap before my extreme POI, and then it's continued going up, and that's when we see the reaction. So I see a nice bullish candle, and then a big distribution to the upside, and then I was looking, okay, so now let's get in. We have a nice fair value gap here. Okay, and the problem here is I placed my entry here. I think my stop was okay. You can see that my stop was here. So, and then my target was, here you go, this extreme N. Okay, so this is the extreme N of the big POI which we saw on the weekly time frame. So this is the weekly time frame. Now why this one is, we have a week. I could have easily targeted this week as my draw of liquidity, but I was looking at this one here because we can clearly see the intention that the market was trying to go up. So from this big candle, from this momentum candle, trying to, at least market's going to take out some of these liquidity over there, because we have some sell stop, or buy stop, sorry, we have some stops there. Talking about buy stops, yes, we got some over there. Unfortunately, this week wicked me out, and my bias was still bullish, so I was like, okay, let me enter for a bullish action as well. So let me get rid of that, and here we go. So we have the displacement on the upside, nice candle to displace up, and I was okay, so where is the order block that created this displacement? It was this order block here, and I was like, okay, you know what, I'm going to place an entry at this point. Okay, and my stop would be here, and my target would be here. In this case, as you can see, that market eventually win this one, here, and that's when we have so market went up to take out all these sellers, sorry, all those stops, any orders that's resting about there got triggered, and there we have a big displacement on the downside here. So this is a big displacement. You can see that market continue going all the way down. Okay, so that's what we want to see. Okay, good. So this is phase one passed. Let's take a look what we got. And market continue going down, all the way down, continue going down. Unfortunately, I didn't take any sell. I didn't take any sell because my buyers were still bullish in this particular case. And here we go. We're waiting for a displacement on the upside. So market displace on the upside. No clear displacement here. And that's when I started seeing intention coming to the market. So I was waiting for so from here I was waiting to see a pullback, maybe to enter, to go higher, but it didn't work, so no problem. So we kept on waiting until we get something here. Okay, until we get something on this side here. So market break this high. Okay, so I'm waiting to see, okay, from the high. So discount premium, of course, discount premium for the order flow. So this is the last selling to buy, so we're looking to buy at this particular point. Now we also have some fair value gap which I've marked here. I want to see any sort of reaction. Did I do that? Okay, so which we did. So market tap into this, we see a big reaction, and I was like, okay, what you're gonna, so this is last selling to go up, so okay, this will be my new order flow, and I tried to enter here, and you can see I got wrecked. So I got wrecked in this case, no problem. So market went down to tap into this order block at the bottom, and then we consolidated a bit. We have intention coming into the market to move up, and then went to the lower time frame. Let me delete this one here. Went onto the lower time frame to find, so you can see we have from here to here, and then we have the fair value gap here, and then market came into the discounted array and triggered my entry. My stop loss would be below that, and then my target this time, let me delete this, my target this time was, where is it? My target this time was, let me go in the 4-hour time frame to make it easier for you to see. Here we go. So my target was this here. My target was, where is it? My target was this here. Okay, now why this one? So this is the last buying candles that we had in this case to push the price all the way downwards. Okay, so this could be an order block on the lower time frame. And I was like, okay, so if we were going to see some sellers, we could see some sellers here in this particular case. Okay. Okay, good. And then we have a big. We can see that we have a big fair value gap in this particular case. Okay. Now let's check in. We have a big push on the upside. The order is going to be taken already. Okay, so from here mitigated already, so this is the one. In this case you can see that we are currently there. We're already past the account, that's the main thing. Okay, now that we've passed the account, and so once we have passed the account, so this is showing you that it does work. Again, so if you want to be less aggressive, it's up to you. Okay, and you can actually see that the market condition was not perfect. Yes, market was going up, and we try to find a small swing. So the swing was small. It was not like a big swing, like 1 to 10 risk to reward or 1 to 20 risk to reward. It was not crazy like that. You can actually see one of the trade was, how much was this one? So this one was 2.21. Okay, this was 1.2. Okay, risk to reward. This one was roughly rounded up to 5 risk to reward. You can actually see nothing crazy going on. And remember the first one would have won the first one straight away, but we must stop to break even. Okay. Now, for those of you who are looking to pass it very quickly, then this is something which you may implement. If you have, I don't know, if you have, how much was it? Okay, for those of you who have $131 to spare. Okay, if not, then you can choose something much easier. I think the smaller one is, let me just take a look how much the smaller one is. 700. Next. Again, I'm not promoting them. I'm not promoting them at all. I'm just telling you that I'm using them because swap free account. Here you go. Okay, I'm not promoting it. The only reason why I'm talking about them is because it goes up. So I think, oh no, that's fine. 50%. It's because they allowed you to trade Bitcoin. They allowed you to trade crypto pretty much, which is good in this case. Okay, so the good thing is they give you 15% of the profit from the first phase. If you do pass the first phase, they give you this much, 50%. So you get $292 as well, and on top of that, they do refund you the fee as well. Okay, so the good thing is, so in theory, okay, well, we tested it. So in this case, we have gotten this back, and then we've this back. So we have been, yeah. So we've gotten this one here from the first phase, which is good. Which is good. And then we have a 15k account to play around with. And so once we got the account, that's when we can apply the proper risk management. So once we got the account, then we're going to be risking. Of course, we're going to be our risk is going to be down, so we're going to lower the risk. Okay, so risk, we're going to apply low risk. I'm going to go low risk. Now, some people will be risking 2%. Okay, so if you risk 2%, if your RR is still the same, so if you keep your RR low, 1:2 minimum, 1 to 2 minimum, then if you're risking 2%, then you're making 4%. So therefore, you're making then your target, I would say your reward, your profit. Let's say profit. Okay, so if you're risking still if your RR is 1 to 2, then you're risking 2%, and then you're making 4%. In this case, 4% is good. 4% is good. 4% is good. 4% is good. If 4% is good for you, then 4% is good for you. Okay, so 4%. Let's take a look. I think you guys know how much 4% is. It's like £600. 600 pounds, $600, euro, 600 euros. Sorry, $600. $600 roughly. Let's take a look. Yeah, $600. So you're making $600 in this case. Now, this is not for those of you who be looking for trading as a job. Then 4%. So 15k account, 4%. It's not for you then. Okay. Now, for those of you who have a job like me, have a job, and you're just looking for like a side hustle, then yes. Otherwise, you will have to go up an account, and the account that you want to look for would be. Do I have this here? Okay, so let's take a look. So if you're looking for an account, proper account, let's take a look. If you're looking for an account, let's see. So let's say 4%. Let's say 4%. 25k. 4%, 1,000. Okay, so maybe you're looking to get £1,000, $1,000 a month. That's something you're going to be looking at, or maybe $2,000 a month. Then this is more like it, maybe. So therefore, you're going to be looking at the 50k account, or 100k account. Say 100k account, then you'll be getting 4k a month. If you do, you're risking 2%. Okay, and if you're risking 1%, then it's going to be different. Yeah, so if you're risking 1%, 1k a month in this case, 1% on the 100k account. Okay. Yeah. Now the key idea here is to do this. Let me show you. Not this one. The key idea is to. Let me see if I can delete everything. New. Don't save. Here we go. The key idea here is to have multiple funded accounts. So you have funded account. You have multiple funded account. Okay, to have multiple funded accounts. Okay, so let's say. So my aim is to. Let's say, look, my aim is to. So whichever is cheap, yeah, whichever is cheap, you can do that. My aim is to, let's say, we have. Okay, so let's say you have. Okay, let's do this for example. Let's keep it consistent. Let's say we are someone average. We don't have that much money going on. Okay, but we are able to pass. The thing is, we are able to pass. We're able to trade. Let's say we are able to trade to get profitability consistently. So therefore, what happens is you have 115k account, 15k account, 15k account. Okay, so let's say, so this is what account you have, and let's say you've passed already, so they all pass, of course. So, or passed. So therefore, it means that you're getting let's say your RR is 1:2. Your RR is 1:2. Okay, and this gives you 1. So let's say you're risking 2% on one account. Okay, again, now remember to fail the account, I think you need 5% to fail the account, so you need 2% to pass the account. Okay, now let's say you are risking 2%, so let's say your risk is 2%, therefore your reward, so the risk percent, so therefore your reward is going to be 4%. Because remember, per trade you're risking 2%, but your RR is 1:2. Therefore, you're gaining. So this is the minimum I'm talking about. Because some of the trades, depending on where the resistance support is going to be, where the order block is going to be, where the order flow is going to be, could be slightly higher, slightly lower. Okay, so you're going to be getting 4% on the account. Okay, now 4% on one account is 600. So since if you have 3, then you multiply by 3. Okay, so per month you're looking to be getting 1300 a month. Okay, 1300 a month. All right, 1300 a month. 1300 a month. All right. Now, 1300 a month. Now, likewise, if you do so, once you're comfortable, and if you're able to do the same thing, for example, let's say if you do the same thing with a 100k account, or 100k account, okay. Now, 100k account, 4% of that. So 4%, 100k account, 4%. So this is $40, $40,000. Okay. Now let's say you have 3 of those accounts. Okay, so 3 of those accounts pouring down. So therefore, this brings you to 12k a month. All right, so 12k a month. So again, so this is for 3 accounts, yeah. So this is for 3 accounts, 3 accounts, 3 100k account. Of course, you need to pass them individually. Yeah, of course, you have to pass them individually, right? You have to pass them individually. Okay. Now, some prop you need to be careful there because some prop firm use there's something called EA, I think bot. Some prop firm don't allow you to trade bots. Some prop firm do allow you to trade bots, so you have to check what do they do. So, for example, here, so you want to check the FAQ. Okay, so let's take a look at EA, for example. If they do have something like this, okay, do they allow EA's expert advisors? Then check this. Okay, just check if there's bots, something like that. Can you trade news if you want to trade news and so on and so forth? Okay, let's do this. All right, so yes, traders are allowed to use expert advisors and indicators to enhance the trading platform. It's important for each trader to ensure that their trading parameters are unique and suited for this blah blah blah. While it is permitted to apply the same or indicators as the traders, and essential to customize settings around to differentiate the trade from others. Okay, right, so trades from others. Okay, so there are few trades activities that are strictly prohibited, blah blah, abusive to the market. Okay, yeah, copy trading. So that's the one we want because you're copying. Okay, here we go. So allows traders to engage copying trading from another account. Same individual. Okay, so you can do that. You can copy your own trades. However, copy trading multiple accounts not owned by the same individuals, including those of relatives, family members, friends, strictly prohibited. An additional blah blah. Okay, so here we go. A significant percentage of trading is identical to one. A significant percentage of the trades are identical to one or multiple traders based on the parameters when price blah 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 blah. If flag is triggered in the account, and they go manual review depending on blah blah. Okay, so a warning will be issued alongside a deduction of profit blah blah will be, and the account may be reset. If you're in profit, your account will not be reset. The account will be directly terminated. Each must ensure that the different parameters. Okay, so different parameters. Okay, copy traders, like a management sponsor, are not allowed independently. Okay, so this is something else. For example, if So you are allowed to pretty much copy trade your own account pretty much. So let's say you have 3 accounts with them, so you can do that. So this is what you can do. So this is okay with them. And of course, you can talk to them. Let's say you have 3 accounts. Will this be able to do that? And blah blah blah. But this is the most likely. Okay. So the one I'm going to be doing would be this one. Okay. So if I can do this one, then I can do this one. Okay. All right. Now, why 15k and not 100k is because of the price. Okay, because look, if you pass one, so one is like this much times 3. Okay, so how much is this? 3, 9, 3. So 3 accounts, you need this one. Okay, now this one is much more. It's like 500. Okay, how much is this? 15,000, 1,500. Yeah, that's much more. Okay, so what you want to do, what I'm going to do is, so once you start winning the trade, I'll be putting the money into buying new accounts. Okay, so hopefully this helps you out, and of course I'll continue to test this trade, for example. Yeah, I'll continue to test this strategy, see if it works or not.